You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we're coming at you live here for TWIFO one final time for the year of madness that is 2020. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you don't know that already, that means you're new. Welcome. We've seen a bunch of new listeners, not just for TWIFO, but for the entire network here this year. So welcome, AB. Remember, if you like what you hear for this or anything we do here on the network, keep those reviews coming on your platform of choice. It really does help new folks like you continue to discover the program and indeed the network in these trying times. Keep those questions and comments coming too. We do love to hear from you guys. Unfortunately, this end of the year time sometimes wreaks havoc with folks' schedules. And unfortunately, we plan to do a whole fun end-of-year extravaganza for you guys here on TWIFO. Unfortunately, my usual cohort, my partner in crime, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell, a little under the weather coming into today's show, so he will not be able to participate. And of course, the folks at CME are traveling hither and yon, getting all their end-of-year stuff together. So we're going to dive right into it, just me and you, listeners, as we head right on into the part of the show you guys want, what you guys asked for last week. We're going to do a very special year in review palooza here, as much as we can. Just you and I. Will be more coming, don't worry, in the weeks to come. And we're going to kick it off the way we always do. In fact, the way you guys requested, with an epic movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All listeners. Let's do it. You guys have asked for it. You want it. Every week we kick off the show, what's moving to the light side and to the dark side. But here, for this end of the year spectacular, we're going to expand our gaze. We're going to look all the way back. It's hard to remember that far, I know. So much has happened. But all the way back to the beginning of this dumpster fire of a year and analyze what were the biggest movers and shakers for the entirety of this insane year that was 2020. So we set our analysis machine much farther back. Usually we go back a week. Now we're going all the way back to Jan 1 of the madness that was 2020. I'll give you the hint right now, listeners. Looking at this chart, if you just showed me this table here of all the different products and how much green is on this list, and had told me this was a year with a horrific pandemic and a very, very divisive election and civil unrest throughout the country and all the other things that afflicted us in the great gift of a year that was 2020, I would have looked at you and said you were a mad person. There's no way these two things are compatible. The news you just told me and this chart. And yet that is where we find ourselves today, listeners, trying to analyze, trying to make sense of the madness, indeed the maelstrom that was 2020. So you know what, listeners? I'm more of a dark side guy. Sean's not here. And also, there's not a lot of dark side to really analyze. So I think we're going to start to the dark side this year, listeners. Let's go out to, we actually were managed somehow, I think, to squeeze out, we managed somehow to squeeze out 10. Actually, let's do 11 because there are only 11 downside movers for the entire year. So let's do all of them. Why not? Let's be charitable. Number 11, we have the old Nikkei. That was off 2.25% here on the year. Number 10, get a little bit meatier now. Feeder cattle off 4.02% this year. Number 9, we've got the peso off 5.33%. Don't talk peso too often here on the show, and off 5.33% this year. So one of the few products out there bucking the trend. Number 8, rough rice. Rough year for rough rice. How many times have I said that? Not that many, but whenever it comes up, usually it's in the negative context. Off about 5.71% on the year. Number 7, our old friend lean hogs. Not a lot of hashtag hog love out there for them this year. Off about 6.13%. Now we're jumping up again here. Number 6, live cattle. Off a whopping 9.83% on the year. Just a rough year for livestock in general here, listeners. Demand obviously fallen through the floor. Restaurants closed everywhere. Trade war didn't really help with that either. So, and of course, the shutdown of all sorts of transit and trade between the major nations didn't help. So a lot of that leaning on the demand for livestock this year. Number 5, one of our more frequent offenders these days, and it's getting up there in volume too, one we have to start paying attention more to in the year of 2021. This is Class 3 milk, off 15.84%. If you're wondering, it was number 2 to the dark side last week as well. And number 5 for the year, Class 3 milk, off nearly 16%. Now we're jumping up again. Number 4, RBOB, off 19, almost 20%, 19.75% pretty much. It was also number 4 to the upside last week, and number 4 for the year to the downside. And number 3, if you know if RBOB's number 4, you can probably guess what some of the, actually all the remaining ones are. Number 3, it's our old friend WTI. You know, it's easy to forget in this recent explosion of upside, WTI's had a rough year. We won't even get to April yet. That's a little bit later. But yeah, rough WTI in the year off 22.2%. So even with this recent explosion where it's rallied more than 10%, it's still off substantially here on the year. And if you're wondering, last week it was number 3 to the upside. So good couple of weeks here for WTI, but a terrible year, off 22%. Brent, number 2, off 25.3%. Don't talk a lot of Brent because it doesn't do a lot of options paper over there at CME. Most of the story on energy is in, things like nat gas and WTI. But still, Brent, number 2 from a mover's perspective to the dark side. And then number 1 with a dark side bullet this year, heating oil, off 27.25%. So a rough year pretty much across the energy sector, dominating the top of our dark side, which pretty much, if you take energy out of the equation, we'd be hard-pressed to even find a bottom 5 on this. This really is an upside year, listeners. So let's do it. We'll expand our horizons. Let's go all the way to a top 15. We could do a top probably 30 here if we wanted easily. But no, let's cut it off somewhere. Let's start off number 15, which coincidentally enough is the Russell 2000. It had kind of a weird year going for a while there, and then the last month and change, it really turned it up into high gear, and that translated into a number 15 spot on our movers and shakers list to the upside this year, up 17 and a third %. Number 14 coming in just north of 20%, 20.09% to the upside. It's corn. Things weren't looking great for the Ags for a little while there, and now of late looking a little bit better. Corn, 20.09% to the upside this year. Number 13, soybean oil, up 21.01% here on the year. I don't talk the oil as much. Talk the beans a number of times here on the show. Don't get into the meal and the oil as much, the individual components out there. But a good year for them as well, 21.01%. KC wheat. A lot of ags here on the bottom half of our upside list. KC wheat up 21.64%. Number 11, a name you guys paid a lot of attention to this year. This is gold, up 24% on the year, 24.16% to be precise. All you wondering how gold would fare in a pandemic year, a year where inflation, maybe the reins are taking off inflation a little bit. There you go, up 24.16%. Copper, similar year, up 25.45%. Now we're into the top 10 here, listeners. Number 9, more metals here. Palladium, up 28.42%. Now we're jumping back up. We just talked on the oil and the KC wheat, and then now we're jumping back into beans. Interesting. So some of the ags moving around a little bit. Number 8, soybeans, up 38.21% out there. So interesting year for the beans. We talked the beans a number of times on the show this year. I'm sure we will again in 2021. Number 7, soybean meal, up 44.07%. Now we're talking some serious numbers here, listeners. By the way, if you're wondering, last week on the show was number 5 to the upside, up 4.5%. Number 6, silver, up 46.22%. So we talked a lot here on the show about the dissonance between gold and silver this year. Eric Norland talked about it in his research when he was on the program very recently. Usually the gold-silver ratio is something interesting, easy to track, but silver obviously had a banner year this year, outperforming its shiny counterpart there, 46.22% to the upside. It was also number 2 to the upside last week as well, up nearly 9% just last week alone. So interesting couple of weeks and indeed months and indeed year for silver. Number 5, the NASDAQ 100, up 47.02%. It's a major index, listeners, up 47%. What an insane year we're looking at here. Number 4, iron ore, up 69.75%. Number 3, the Eurodollars, jumping up again, 89.12%. These are astronomical numbers by just about any way you can cut it here, listeners. Numero dos here on our top upside movers for 2020. A name we've talked about a lot here in terms of moving and shaking. Not so much on the options because it doesn't really trade any, but it's lumber. Crazy year for lumber as well, up 117.75%. You might think, oh, it's like a nat gas, maybe it's a cheap contract. No, that's a very beefy, very expensive contract. Still had a huge move this year. And so you might be wondering yourself, what pray tell is the number 1 mover and shaker to the light side here at CME this week? You could probably guess. I'll give you a hint. It was also number 1 on the show last week, up 26.14%. If that doesn't tell you, I don't know what's going to help you. Yeah, it's Bitcoin, up 275.91% on the year. Oh, how the mighty have continued to rally out there. What an insane year it has been for Bitcoin. Earlier in the year, we laughed off someone coming in and buying the 36,000 calls in January out there. Now, if it keeps on this pace, it's probably going to blow through that strike by expiration. It's only about 8,000 handles away now, which Bitcoin has done just in the past couple of weeks. So insane times we are all collectively living in here, listeners. Now, you guys have also asked us about how these assets interplay with each other. So we're going to do that for you here as well, breaking down some of the more interesting correlations we saw throughout the year. Again, you guys, if you have the premium tools, you can go to cmegroup.com/TWIFO for the TWIFO report, and that'll get you all the stuff we talk about normally on the show. If you want to talk about these deep interrelations, you got to upgrade a little bit over there. But if you do that, you can check out how all these assets have intermingled throughout the entirety of this year. And 2020 was an insane year. If ever there was a year you want to look at cross-asset correlation, it is this year. People always say, you need to have your traditional portfolio diversification, maybe 60% in stocks, 30% in some sort of fixed income asset, and then maybe 10% if you're crazy in an alt like gold or oil or something else like that. We've learned this year that when all the madness hits, correlation tends to go to 1, and when the year is as turbulent as it is, the correlations are pretty interesting to break down. So let's break it down here. Let's do the top 10 positive correlations on the year. And then we'll do some of the strongest negative correlations we found out there as well. Number 10 for positive correlation. Some of these may be surprising, some others not so much. Number 10 probably falls into the latter category. The euro pound, pretty closely correlated at about 58% on the year. Number 9, a little bit more interesting. Perhaps I probably put this in the more surprising category. It's the S&P 500 to RBOB. An interesting one. And that's about a 60% positive correlation. So that I would probably file that under the surprising category. Number 8, not surprising. Corn to soybeans at about 63%. Number 7, also not surprising. WTI to RBOB at 68%. So in case you're wondering, the E-mini almost as correlated to RBOB as WTI is. Fascinating. Number 6, also filed in the not surprising category, heating oil to RBOB. They're about 70% correlated there. Getting on out to the rates complex, we got the 2-year to the 30-year. 2 different portions of the curve, yet still highly correlated, 71%. Number 4, just talked about it earlier, a ratio and a level I know a lot of you watch throughout the year. This is the gold to silver. In this case, we're talking correlation. They're about 78% correlated for the year of madness that was 2020. Again, this is just January 1st until now. This is not anything beyond this year. So just talking about the maelstrom of 2020 here. Number 3, WTI to heating oil at about a 79% positive correlation. Number 2, the second strongest positive correlation we saw this year, almost 1-to-1. This was the S&P 500 to the NASDAQ, 93%. That probably won't come as a surprise to you. We talked about this on many of our shows this year, Option Block Volatility Views, how much the crossover is growing between those two products there. Now with Tesla diving into the S&P, you have effectively the top 6 or so names being very similar in both indices, and as a result, a lot of cross correlation. As you see here, 93% for the S&P 500 to the NASDAQ. What could outstrip that? Well, if you answered it was the 10-year to the 30-year, you are correct, to the tune of 94% correlation out there. So that's 1 point stronger. That's the only thing that could top the S&P 500 to the NASDAQ. Let's go in the other direction now. Let's find some of the weaker or more negative correlations we could find out there. Not hard to find a direct 1-to-1 negative correlation. Those not really on the charts here for 2020, which again, maybe goes to speak to some of the lies you've been taught about hedging with different asset classes. But let's talk about what some of the negative correlations we did find. Some weird ones here on the list as well. Like number 8, WTI to the yen. Interesting. 27% negative correlation. I would not have thought about that on my list here for number 8. Number 7, similar frame, also surprising, heating oil to the yen. Yen and energy, just not playing well together this year. 31% negative correlation. Number 6, we've got the S&P 500 to the old pound. The pound to the S&P 500, negative 33% correlation this year. Now we're going more traditional route here for some of these next ones, more equity to fixed income. We got the NASDAQ to the 30-year. I remember everyone always touts fixed income bonds as these kind of inversely correlated hedging items, and yet the NASDAQ to the 30-year, only negative 34% correlation on the year. You say maybe you want to get a little bit shorter in the yield curve, get a little bit closer to home. Let's go 2-year. NASDAQ 2-year, number 4, also 34%, so actually tied effectively with the 30-year. The NASDAQ to the 10-year, getting that middle portion of the curve, a little bit stronger negative correlation at 37%. And then number 2, we've got the E-mini, the S&P 500 E-mini, to the 2-year at 39% negative correlation. And the strongest negative correlation we could find on the board this year was the S&P 500 E-mini to the 10-year, about negative 46% correlation. So still there, again, fixed income often touted as this inversely correlated asset class, and yet the strongest we could find on this year, a year when it really counted, was 46%. That's why I've said it before, I'll say it again. The best, the really only reliable source of true inverse correlation, you can put a stamp on it, you know you got it in your hot little hands, is indeed a put option, is options. And you can make an argument for volatility as well. It has a stronger inverse correlation, certainly than that, depending on where you're looking, somewhere around 70 to 80% normally in most of the major volatility products, a little bit stronger maybe on some days, weaker on others. But volatility is going to give you a much better inverse correlation than the fixed income. And then certainly a put option. At the end of the day, you buy a put on any of these products and you know exactly what you got, because you have it in your hot little hands. So if you want true diversification, true inverse correlation, I recommend you toss aside all your thoughts of diversification through multiple asset classes. Pick the ones you like, put some puts on them, and then live to fight another day. Just remember, be judicious with those puts because they can get a little pricey. If you want to know how to make that put a little bit cheaper, listen to all the other shows we have on our network. We talked about it, I think, conservatively 8 million times over the last nearly 14 years here. All right, let's see. Now we're going to mix it up a little bit again. Going to move it and shake it in a different way. Again, you guys can do this for yourselves if you have the premium version of the old Quick Strike out there. Go out to the scans and let's look at what was moving and shaking for the year on a volatility perspective. A little bit different. You have to look at kind of the constant maturity. It's a little bit harder thing to analyze. It's not quite apples to apples out here, but it is a pretty useful tool nonetheless. And if we do it that way, we'd find that the number one in terms of change from this time last year, so December 30th of last year, the 1 year change from a year ago in December till now, the largest percentage change in terms of net vol was Class 3 milk. Our old friend Class 3 milk got a lot more volatile this year. Not surprising if you listen to our movers and shakers list of the year. This time a year ago, Class 3 milk was trading at about an 11% vol. Now, coming into today's show, it's at a 34.3%. So it's a net vol change of 23.3 points, or in a percentage change, 211%. So a crazy year here for Class 3 milk. Let's see what else is going on out there. Peso, once again, lighting it up. It's number 2 here on our list with it was trading about a 6 2/3% vol last year. Coming into this show, 16.16%. So it's gained nearly 10 points on the year, vol points, and it's 144% in terms of net increase in vol. I know percent with vol drives people crazy, but that's what we're talking about here, listeners. Number 3 on our list for the biggest vol movers and shakers of the year, our old friend silver. Crazy year for silver. This time last year, 16.85% at the money vol. This time this morning, almost 41%, 40.91%. So you're talking a 24.05 handle swing, really, in the vol, and 142, almost 143% increase year over year. Obviously, this mixes it up a little bit because this has different terms of the product as well. So you got 30-day milk, 60-day milk, 90-day milk, same thing with silver. So you have a lot of different expirations and durations of the same products, gumming up the works here a little bit. So let's jump by some of the similar ones we just talked about. Now let's go out here. Our next product on our list, soybean meal. This time last year, 14.5 vol. Coming into today's show, nearly a 30, 29.69. So it's moved about a little more than 15 points on the year. That's good for 104.3% gain out here. Platinum, similar story. 17.25 vol a year ago. Today, almost 34. So you're talking almost 17 points in terms of vol gain, and nearly doubling, 96.73% here on the year. Russell 2000, one we talked about quite a bit here, particularly in the last couple of months, how it's just been on fire. A year ago, 14.25%. Coming into today's show, 27.5%. That's good for a 13.25 vol points, or 93% on the year. Lumber, our old friend lumber, a year ago, a sleepy 28.09%. Coming into today's show, 53.62%. That's good for a almost 91% increase on the year and a 25.5 handle swing to the upside. Let's go back out here. Let's see. Copper also on our list here. Once we get past some of the other expirations of similar products we just talked about here. Copper, a year ago, 14.1%. Come into today's show, 23.63%. That's good for almost 10 handles to the upside and a 67.5% increase in terms of vol. Gold, you may be wondering, how's gold looking? 10.25. That was the vol a year ago. Coming into today's show, 16.75. So it's good for about 6.5 points net on vol and about a 63.5% increase year over year. Let's go out to corn. Let's go out to the ags again. 10.68% a year ago, 17.21% now. She's talking about 6.5 points there as well, or about 61.2% increase on the year. Let's go scrolling down a little bit farther. Let's go out to heating oil. Almost 21% a year ago and 33.03% today. Talking about a 12-point swing and about 57.8% gain on the year. Aussie dollar, 6.5% a year ago, 10.25% coming into today's show. He's talking not quite 4-point swing, but still good for 57.4% increase on the year. Let's see, the NASDAQ, 16% almost last year, 15.97%. Today, 24.5%. 8.5 points net increase on the year, or about 53.25%. S&P, big one, nearly 12% last year, 11.87%. Come into today's show, 18.14%. It's good for about 6.25 vol points, or about 52, almost 53%. Dow, similar story, 4.33%. Actually, I'm sorry, the Dow is 12.08%. 4.33% was the Canadian dollar. 12.08% was the E-mini Dow, 18.42% today. Talking 6.25 vol points, or about 52.5%. Let's go down a little more. Let's find our old friend WTI. He's a little bit lower on this list. A year ago, it was trading a pretty hefty vol of 23.09%. We saw this year, vol can get much higher in WTI, and indeed it did. And coming into today's show, the vol was 34.6, well off the highs north of 60. We saw it hitting out there earlier this year. She's talking about 11.5 points of vol to the upside. That's good for nearly 50%, 49.88% increase on the year. Let's see if we can find a couple more here to round us out, listeners. Some of the products you guys like to watch on a regular basis. Nat gas, a product that is known to exhibit a little bit of volatility here. 43.5% a year ago, 63.09% today. Good for about 19.6 vol points to the upside, or about 45% increase. So nat gas, always pretty volatile, and of late, more volatile, but it's kind of come off a little bit off the peaks there. So interesting stuff out there in NASDAQ. Let's see if we can find one more interesting one here on this list, a product you guys like to trade on a regular basis. Not so big on the feeder cattle here on the show. A lot of FX. Wasn't a lot lighting up FX from a vol perspective. Let's look to the Euro USD, the big dog out there in FX, right? 5.1% vol a year ago, 6.82% coming into today's show. So about 1.75 vol points to the upside. Still good for 33.8%. You're starting from a small baseline, so it doesn't take a lot to really move the needle out there. Okay, we'll end on one more. Let's go to, we've got live cattle. Yeah, let's go to the cattle. Why not? Just for fun. 13.75% is where the vol was a year ago. Coming into today's show, 17.42%. It's good for about 3 2/3 vol points, or about 26.5%. You guys can crunch these numbers for yourselves. There's a lot to unpack here. Huge list of names. We kind of just scratched the surface here on the show. All right, you know what? Since my buddy Sean isn't here, we'll hold off on some of the other product categories for this. We'll come back to them more, I think, on an early show here in 2021. But before we head out of our end of the year mini spectacular, let's let you guys take the reins a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it one final time here for 2020. Let you guys off the chain, see what you have on the brain. Last week, Elgers asked us, what were the hottest movers and shakers of 2020? Well, Elgers, I hope you just enjoyed that epic movers and shakers report for the entire year of 2020. Never let it be said that if you ask on TWIFO, you do not receive. You got your answer in spades, maybe even in some ways you didn't anticipate. We talked about cross-asset correlation, biggest vol movers and shakers, and of course the net underlying movers and shakers as well. I wish I could find some way to really easily and readily analyze skew over the entirety of the year. If we could generate a report for that, that'd make it even more fun. That's a very subjective thing. That's why it's difficult to do such a thing, but every time you talk about vol getting and all these other things, it gets a little bit more nuanced, a little bit more subjective. It's not as straightforward as an underlying metric, obviously, but talking about the greatest shifts in skew throughout the year and things like that would certainly be interesting. And I'm exploring ways to do that for you listeners that would be useful on this show. Some of these measures are a little bit too subjective, not exactly too useful, but looking forward to adding more to the movers and shakers coming up in 2021. Stay tuned for that. All right, next up we got Andy. Andy's probably got the question of the year, a question everybody has on their brain this time of year right now. Andy wants to know, what was your biggest surprise this year? Well, I'm assuming we're going to limit it for the purposes of this show to the context of futures options trading. So we'll leave it there. There were many other surprises outside of that, most of them unwelcome, that I won't go into on this show. But from a futures options limited perspective, Andy, it's kind of hard to trump. I mean, you can maybe put the Bitcoin recent resurgence in that category. That certainly was surprising, the scope of its resurgence. I don't think anyone had, outside of the guy who had the 36,000 calls, I don't think anyone had the scope of this rally really in mind. So that could certainly be up there. I wouldn't fault you for saying that. For me, though, it has to be, I have to go back to the heady days of April. And that moment, listeners, when the WTI futures crossed over from a handful of cents into the negative territory. We saw negative futures printing at CME. We saw negative option strikes listed for the first time that I've ever seen on a major U.S. derivatives exchange. I'm sure it's happened around the globe, but here in the U.S., not so much. So to see that unfold here in the year of madness, that was 2020. I think that shook everyone to their core. I don't know a single person who spends their lives and their days analyzing futures and commodities and commodity options, everything else along those lines. I don't know a single person who wasn't shocked to their core by that, really, at the end of the day. We all knew theoretically this was possible. This was a commodity that needed to be shipped and to stored, and so there were delivery and storage costs, and those things could have weird, aberrant impacts on the price of the product. Everyone knew that theoretically. Practically, a different story. And so seeing it trend negative and as hard as it did, that was probably that has to be my shock or / surprise. I forgot how you put it, Andy, of the year. Along those lines, we did ask you guys around that time back in April, everyone talked about 2018 and the meltdown in volatility, and meltdown in the markets, the explosion of volatility, and then the subsequent meltdown in some of the Franken volatility products out there. And so as a result of that meltdown back in this year of crude oil, we asked you a similar question. We asked you guys, hey, crude oil trended into negative. Who knew? What do you guys think now about some of the more popular ETPs you guys trade around these things, in particular USO? USO is having problems. Some people were wondering if USO might go the way of the dodo, follow products like XIV and other Franken products that blew out as a result of crazy aberrant swings in their underlying marketplace. So we asked you guys, quite simply, do you think USO will still be trading at the end of the year? Now, I'll give you this caveat. I will say that what USO is now versus what it was back at the date of this poll, April 23rd, a very different beast. So you could maybe say that this is maybe USO 2.0 out there versus what it is. Maybe you could say that the original one isn't really around anymore, because it's not. But either way, you guys said 54.8%, very close, very heated debate. 54.8% said yes, it will be, and no, 45.2%. As of today, it is still trading, so the yeses had it, but it was a contentious issue, and that just shows how crazy that moment was, listeners, when it could, the ancillary impacts of that rippling throughout the markets, and still are. I think the number of case studies and treatises and PhD dissertations and everything else that will be written on the legion of data points that generated this year, I think will consume academics and economists for decades to come. Unfortunately, listeners, that music means you don't have decades to come here on this show, because we're done, at least for this year. But before we go, I'll take a time to thank my cohorts out there, Mr. Sean Smith, for joining me throughout the year, helping bring this show to you. Literally, this show wouldn't happen every week without the folks at Footsie and the folks at CME. So if you like this show, anything we do, shoot them a thank you over there on the old social medias for helping to bring these shows to you week after week out here. Hopefully Sean is feeling better. We'll get to talk to him here next week. And of course, before we go, I can't say goodbye on TWIFO without thanking each and every one of you who has participated on the program this year in terms of downloading, streaming, subscribing. We love all of our guests too. You guys were all great. But you guys out there in the listening audience are the reason that we do this, and you have joined us pretty much en masse this year. We appreciate each and every one of you for joining us, whether it was after the crude oil debacle and you said, hey, I got to figure out what's going on with these commodity options things, or the volatility, or any time throughout the year. If you're new, if you've been listening for a while, we love you all. We want to thank you all. You guys are literally the reason we do this. We wouldn't exist without you guys. And we'll see you back here again next year for another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores.
Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.